Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, June 11th, 2019, and we are now in the final hour of the market. As I mention every day, I believe that the closing prices of the day are the most valid prices, the strongest prices, so therefore I use the price as close as I can get to the end of the day to make all of my buying and selling decisions. So anyway, we are having another good day. I'm happy to announce. So David Gordon Russell, we just chatted a second ago, but good to see you, my friend. Thank you so much for coming by. And let's see, we got Andy. Andy is in the house, as they say. How you doing, Andy? Good to see you. All right. Can everyone hear me okay? Just want to make sure all this technical stuff is working. Let's see. Mount Doji's here. Hey, Mount Doji. How you doing, my friend? Good to see you. Okay, let's see. All right. Well, let's get to it. So, what we're going to do today, the format for today is we're going to run the legal disclaimer. Then we're going to come back. We're going to take a look at my current positions, why I bought or when I bought them, why I bought them, and how I'm going to manage them going forward. And then after that, we're going to go through my watch list of stocks. We're going to take a look at each one at the technicals, the support and resistance, and we're going to see if there are any potential setups for today. Hey, Frederick's here. How you doing, Frederick? Good to see you. Thank you for coming by. I appreciate it as always. Let's see here. All right, so we got Andy, David, we got Mount Doji, we got Frederick, we got, that was it. Let's see, Andy, David, Mount Doji, and Frederick, and myself. So, okay, hope everyone's doing well today. So let's go ahead, run the U.S. legal disclaimer first, get that out of the way, and then we'll come back and we will start analyzing these markets and see if we can make heads or tails. So be back in about 40 seconds. Hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, so, hey, Johnny's here. How you doing? Good to see you, Johnny. Glad to see everyone. It's always great that you guys stop by. So like I said, we're having a good day. The market is actually, it's down across the board. The Dow's down 52, NASDAQ's down 13, the S&P is down 5. Was up higher earlier in the day. So, you know, we've had quite a run here. So, you know, to go sideways or go down a little bit would not surprise me at all. Let's go through my charts here, or my current positions, and see why I got in them and how I'm going to manage them going forward. So, hey, Steve's in the house. Hey, Steve Burns. Hey, thanks for coming by, my friend. I really appreciate it. I think it's always an honor to have Steve in on the live stream, and I think it's a thrill for everyone else. All right, let's go ahead, take a look, see what's going on. All right, so I bought Apple. on the 7th of June when we had this big strong break back above the 200-day. My initial stop would have been a close below the 200-day, but luckily it started moving in my favor. So my initial target on this was a 70 RSI, and as you know, I like to phase out of my positions as it's going my way. So yesterday I think I phased out of 2 positions, and you can see I did phase out of another partial position, about 16% today here, a little bit higher than where we are, 1994, and now it's reversed a little bit. So you know, I'm considering this a discretionary trade, not a trend following trade. It did make a higher high today. If this were to close below a 50 RSI at this point and or close below the previous day's low, I would probably go ahead and exit. I don't really like the action that happened today with the rejection of the third ATR channel, but because I phased out and you know, I only have a portion left of my initial shares, I'm going to be a little more patient with this and give it a little bit more breathing room. But you know, if we close below the 50-day moving average, I would consider just locking in the profit. Or tomorrow, if we close below the 50 or below the previous day's low. But if we do continue to move up, I will definitely continue to phase out. So Apple's doing well, did hit one profit target today. DDM, I did buy DDM back here on the 6th of June. I bought this with this nice strong close back above the 200-day. This is a trend following trade for me based upon the back test on ETF.com or ETFreplay.com. This is a good quantified profitable approach, at least in the past it has been. When you buy above the 200-day, you keep it until it closes below the 200-day. So at this point, I'm just going to continue to hold this position, phase out on my way up, or if it closes back below the 200-day, that will be my stop to the downside. But I have phased out the last few days. You can see I did get part of my position sold today near the very top here at this dotted line here. So I believe I have about, let me take a look real quick. So that's, DDM is the double leverage. So 17.8. I'm out of about 30% of this position based upon my phase out. So going forward, I will continue to phase out until I run out of shares, or because this is a mechanical system, I will get out if we close below the 200-day. But anyway, it has reversed a little bit today, but you know, with the phasing, I'm glad that I did get out near the high today. 5. So this is an unusual trade, at least for this channel. This is based upon a this chart pattern where we go up, we make a higher high, we come back down into the value zone. The value zone, I consider the value zone between the +1 ATR and the -1 ATR channel. So we moved up, we came back into the value zone, which is to be expected. Moved sideways. Last week we stabbed down and reversed, and I did take a position in this based upon this current week, yesterday being above 2 weeks ago close. So this is a V2 day, week 1, week 2, week 3. Week 2 goes below week 1, and week 3, which is this week, at the time yesterday was above day 1's close. So this is going to be a longer term trade because we're dealing with weekly bars here. My initial stop on this is going to be a close below this washout day, which right about here. So as long as it stays above this, I'm going to keep it, and then I'm targeting up here near the previous high. So it's a good risk from here to here, up to here. But this is going to move slower because this is a weekly chart. So today it is down 90 cents. currently is making a lower high and a lower low intraday on the daily. But again, in this particular case, I'm basing this upon a weekly, so I'm not really going to get too involved in what's happening on the daily bars. All right, Intel. I did buy Intel back here on the 29th of May. I bought it because the previous day we went below the 30 RSI, we went below the third ATR channel, and then the next day we closed back up into the channel or above the third ATR channel, and we also closed back above the 30 RSI. That gave me some confirmation to take the trade that the market did not like being under the 30 and it did not like being under the third ATR channel. So you can see this has been a really nice trade. I have phased out as it's gone up. You can see I hit one phase out today near the very top. So this is quite extended. This is the discretionary trade. So at this point, my initial profit target was the 200-day moving average. If we went up, tested the 200-day moving average, intraday closed back below, I would go ahead and just lock in my profits there. On the downside, if today we close below this red line is the 50 RSI. So if we close below the 50 RSI today, I'll also go ahead and just lock in profits. But that's been one heck of a nice trade, and I have been phasing out the entire time. So we'll just let the market tell us what to do with this, either to the upside or the downside. All right, Philip Morris. So I did buy Philip Morris back here on the 6th of June. And why did I buy it? Well, the previous day we were under the 30 RSI and we were also under the third ATR channel. The next day, the day that I bought it, it went from under 30 over 30, and it also went from under the third ATR channel and closed back above the third ATR channel. So that was my signal. That's a signal that I like to take in these deep dips. You can see yesterday it immediately went against us, but it continued to hold the 30 RSI, and it also continued to hold the third ATR channel. That's why I bought it. Today it's up nicely. It's up 1.48%. I did hit one profit target earlier in the day, and then you can see this green line here. This was also got very close to hitting the second one, but didn't quite get there. So I'm going to continue to hold this trade until we close back below the 30 or the third ATR channel. As it starts, if it starts moving up my way, I will continue to phase out as the market gives me the prices that I need. My initial profit target is the 81, or my initial level that I'm looking at is the 200-day moving average. If we move up above the 200 and then close back below, I'll go ahead and take my profits. My secondary profit target here is the 50 RSI, which is up here at 81.66. So if we move up there and then lose it, if we move it there intraday, it goes above, and then below, I will also go ahead and lock in profits there. But glad to see this is moving up today, and it did hit one profit target. All right, the Qs. So I did buy the Qs based upon a back-tested approach of being in the Qs. I based this off of the 250-day. This big thick line is the 200. The thinner line is the 250. But on ETF replay, and I've shown you this before, but you know the results of owning the Qs above the 250 and then selling them when they close below the 250 is a very good quantified, back-tested approach, profitable approach. So you know, it keeps you in the trends, and you know, if you have big sell-offs under the 250, well, you're just not in it. So it is a really good approach. I do like it. I did enter this based upon a trend trade, so I'm not going to worry about what we're doing up here intraday, like if we lose the 50 or anything like that. I would if this was a discretionary trade, but my plan when I entered the trade was this is going to be a longer term trend trade. So as long as this stays above the 200, I will continue to keep it. If it closed below, I would get out, or to the upside, As it keeps moving out, I will continue to keep phasing, and eventually I'll run out of shares, and that is fine. But you can see I did hit one profit target today right near the top, and it has reversed since then. I believe at this point, yeah, I've sold about 60% of my position in the Q so far. So there's the Qs, the SPY. Okay, so as many of you know, and just in case we have some new viewers, I do buy the SPY each day at the end of the day, and I sell it first thing in the morning. And why in the world would I do that? Well, I base this off of a test that was done since 1993. If you would have bought the SPY on the open and sold it on the close, so you sell it, you buy it in the morning, sell it in the afternoon, since 1993, you would have had a negative 5.2% return. But if you did the opposite and you bought it on the close in the afternoon and you sold it in the morning, the next morning, the return would have been 568%, meaning that more than all performance came in after hours trading. Now, this back test was done from 1993 till I think 2017, and then Stephen Burns was nice enough to send me some updated numbers up to January 19th. And so you can see in the previous example, the buy in the morning, sell in the afternoon, you would have returned negative 5.2%. But more up to date, you would have actually returned 13.9%. And on the other side, the buying in the afternoon, selling in the morning, up to 2017, you would have returned 568%. But the more recent numbers are actually 634.2%. So, you can see whether you're looking at this chart or this chart, the green line compared to the red line, the buying in the afternoon, selling in the morning over the long term has been a really great back-tested method approach compared to the opposite of buying in the morning, selling in the afternoon. It does have drawdowns along the way, so you have to be careful. You have to take a position size that you can say, I can do this every day long term. Steve Byrne also sent me an email today. He actually, by hand, went back and tested this by every day for every year just to see what kind of numbers he came up with. And he was nice enough to share that with me. Pretty amazing. His final numbers came up with 712% return. And this one here at 634, this was till January of 19. So we're longer than that, but up to date, his numbers came in at 712% return. So pretty amazing work that he did. It's always nice to do your own work, just so you can, get your own figures and your own results so you can really see. But I think it's fair to say that the buying in the afternoon, selling in the morning has far outperformed the opposite of buying in the morning, selling in the afternoon, which also leads me to want to tell you that, you hear a lot about day trading. Well, the thing with day trading is that, for day trading, you need movement, right? Well, let's just take this chart over here. If you're a pure day trader, meaning you buy in the morning and you sell in the afternoon, you don't carry anything overnight, look at the return from the morning till the open. There wasn't a lot of up movement for you to go ahead and do that, right? All the movement came in after hours. So the very fact that you're holding trades overnight, which seems scary, and it's the bane to day traders because they don't like to carry things overnight. But, I think the numbers clearly show you that the moves come in the after hours market, not intraday. If you're a day trader, that's where you're trying to trade. There's just not a lot of upward movement. So it makes it doubly as difficult to be a day trader. You're fighting for pennies. The bid-ask spread is going to affect you more. Commissions are going to affect you more. So that's why I'm not a day trader. But thank you, Steve, for sending me that. I appreciate it. Amazing amount of work you must have done. Excuse me. Dr. Jorgen, PM also happens to have a 5.5% return. Yeah, it does. Actually, I think Philip Morris has even more than that. 5.9%, Bruce. 5.9% yield. But, just kind of as an aside, don't get caught up too much in yields, because if you're holding something that has a nice yield, if the stock just goes down and down and down, then you're giving up that yield by losing it in the stock price. All right, so let's see. Oh, good idea. I was thinking about doing that, but I didn't know if you'd mind. So here is the annual breakdown that Steve did. Let's see. With the compounding. So this was starting from 1993. He started with $100. Again, this is the buy the SPY in the afternoon, sell it in the morning. 1993, starting with $100. First year made $10.67, 645. Next year 706, 21, 47, 52, 95, 73. 2001 was a tough year with a $51 drawdown, $31 drawdown. 2002 went up from there, had another losing year here, and so far this year down a little bit. But you can see, starting with $100 in 1993, by the time you got to 2019, 712% return. Pretty amazing. And I imagine, I don't know if you factored into that commissions or not, but probably be a good time just to mention, it's important to use a broker where you have low commissions. Commissions can eat up so much of your profits. They can eat up close to 25% of your profits. So anyway, I'm a big fan of the buy the SPY in the afternoon and sell it in the morning. And speaking of, I guess, we did, I did buy it yesterday here at 289.07, and you can see I sold it in the morning for a nice little profit, 290.90. So I bought it at 189.09 and sold it at 290.90. So that was a nice trade. And you can see the last, here's a different story, but in the last 6-7 trading days, bought here, sold here, bought here, sold here, bought here, small win, bought here, sold here, bought here, sold here, bought here, sold here. So anyway, all right, VIX. I did go ahead and buy VIX back here on the 7th of June. And the reason I did it was because on that particular day, the market was up a lot, but the VIX prices are based upon the cost of puts. The more expensive the puts on the S&P 500 get, the higher the VIX goes. So on this particular day when the market was up so strongly, theoretically this should have been down substantially, but it wasn't. It was actually up on a day when the market was up. So, it kind of caught my eye, showing me that that means puts they're becoming more expensive. And the way I process it is they're becoming more expensive because people are buying more puts at these higher levels. And we had such a big run. I think people were expecting a little bit for the market maybe to go down a little bit, essentially, but that was showing up in the price. So I did buy it. My initial stop was this red line. I bought it also because it was a V1. Here's day one, day two washes out day one, reverses back up. My initial stop was halfway of this bar yesterday. It closed right on there, luckily. So we kept it. You can see the VIX was up higher earlier today. Didn't quite get to my profit target, but as long as it holds above this line here, I am going to keep it. But we've had another V1 today. Do you see how today we washed out day one and reversed back up? So anyway, I will be holding this unless we close back above this green line today. And if I do get out, it'll be a very, very, very small loss. And then MasterCard, as most of you know, I rarely short. I've only had 2 short positions in this podcast since we started. I did short yesterday MasterCard, and the reason I shorted it was for 2 reasons. One, we got to the 70 RSI intraday, and then we closed below the 70 intraday. We also were above the 3rd ATR channel, and we closed below the 3rd ATR channel. So just like the buys that I do on the downside here, where it goes under 30, over 30, under the 3rd ATR channel, over 3rd ATR channel, I do the same thing with shorts up here. Now, it was a nice trade to the downside. Obviously, you can see I hit 2 profit targets, one here, one a little lower. My initial profit target is here, the blue line, 257.10. That's the 50 RSI. When we buy at the 30 and we target the 50 above us, because that's probably going to act as some resistance, well, this is a short position, so it is the opposite. We're above 50. There should be some support at 50. So that is where I was targeting. Was the 50. I did hit 2 profit targets, one a little bit lower. So going forward here, I got out of about 38% of this position already. I did only take a half a position because this is a counter trend trade. It's in an uptrend, right? And shorting at this point makes it a counter trend trade. So I like it so far, being out 40% of this. I'll just have to see how this moves. If we continue down, I think there's a good chance that we could get down to the 50, but it's a big bar, it's a big down bar. So I feel pretty comfortable keeping the short position at this point. So it has been a nice profitable green day today, which I'm always thankful for. A lot having to do with the S&P gapping up this morning and getting out right near the top, and MasterCard having a nice down day. All right, so let me just look real quick, see if anyone has any quick questions. Thanks, Steve. Yep, MA or MasterCard was good. You should show them the breakdown. Yep, I did that. No taxes or commissions factored in. Okay. Mount Doji, that was an awesome breakdown. It is. Amazing amount of work, Steve. Alpha is in the after hours. That's right. Dennis, hi all. What about buying the close and selling the open QQQ versus SPY? Hi, Dennis. Thanks for coming in. I don't know, to be honest with you. Oh, good. Here's Steve. Q would likely perform similarly. Yeah. Yep. That makes sense, because they're kind of correlated. Not exactly, but that does make sense. But I haven't seen any actual real numbers based upon that. So, okay. All right, well, let's run down here. And, oh, hey, before we start, I do want to point out, I like to get sayings from some of the most famous and successful traders in history. And Marty Schwartz, if you have not read Market Wizards, I would really suggest that you do. It's a great book. It doesn't really talk a lot about specific entries and exits. It's more big picture psychology, something like this. But Marty Schwartz says, I always laugh at people who say, I've never met a rich technician. I love that. It's such an arrogant, nonsensical response. I used fundamentals for 9 years and got rich as a technician. So, there are a lot of people out there, I guess that's a fair statement, a lot of people that say technicals don't work and fundamentals are the only thing that works. And basically what he's saying, he was a financial analyst. He used fundamentals for 9 years and finally got rich when he switched to technical analysis. I'm not saying one's better than the other. I know there are people that do very well just using fundamentals, and I know there are people that do well using technicals as well. So, I myself am not smart enough to figure out the fundamentals of a company. I don't have a degree in finance or have an MBA and know how to pick apart balance sheets and all this kind of stuff. Let me show you here. So essentially, when I'm trading technicals, this is just my opinion, but I feel like I'm following the lead of people who are smart enough to do that and making the prices move in a direction based upon probably what their real fair value is. So I'm just kind of on their coattails following them based upon the technicals. This is a post from Steve's site, newtrader.com. And let me just post this here in the chat in case you guys would like to go to that. newtraderu.com is Steve's website, but he always has such great articles and just wonderful things. You're doing yourself a disservice if you don't go to his site and check this out. But Ed Sakota, another person that was interviewed in Market Wizards, many consider him one of the top traders. He's been one of the best performing money managers over the last 40 years. But this is a great article. We don't have enough time to run through it, but one thing I did want to point out based upon talking about the difference between fundamental and technical analysis, is that down here he says, Ed Sakota was a technical trader of price action relying on price action and market psychology for his edge and profitability. Fundamentals that you read about are typically useless as the market has already discounted the price. I call them fundamentals. However, if you can catch on early before others believe, you may have a valuable surprise-amental. So, essentially what he's saying there is that when news comes out, it's kind of baked into the price already. And I feel like the smartest people in the world on Wall Street are the ones that are really figuring out what the correct prices are be. I'm not smart enough for that. So for me, just following the technicals, I believe, puts me in the right company. So anyway, I always laugh at people who say I've never met a rich technician. I love that. It's such an arrogant, nonsensical response. I used fundamentals for 9 years and got rich as a technician. So there we go. All right. So let's get on to Mount Doji says, I'm only on the second chapter of Market Wizards. Going to try to get through it a lot tonight. Yeah, such a good book. I mean, just I read it at least once a year. I've read it so many times, but I just love it. I just love that book. All right. Well, let's go through the watch list now, see what's happening. See if there's anything for us today. Apple, we already talked about. I already have a position in Apple. Amazon up nice today, up $9, but I don't think there's really anything that I want to take right there. At this point, I did buy Amazon here when it closed back above the 200, and I phased out yesterday all the way up till yesterday where I ran out of shares. Possibly, if I was still in this, I would keep it. If I was looking for a new entry, I'd probably look for a close below the 50 and then a back over the 50. Boeing did run into resistance at the 50-day moving average and has sold off here, so nothing on Boeing. Alibaba. So, I've been looking for this for possibility entry above the 200-day here. I don't like the fact that we did go above the 50 RSI at one point today and then back down. But, if this does close above the 50 RSI and it does close above the 200-day moving average, I might consider taking this. I would take a half position because we are coming from a lower low situation instead of a higher low situation. And that's just a filter that I use on my position sizing. So let's mark this. If it does, I mean, technically, I guess this is a little bit of a higher low than this, but in big picture, it's really not enough of one for me. So if it does close above the 200, I would consider buying it. But I need it to close above the 200, and I need it to close above the 50 RSI as well. So that's a potential. Caterpillar really gapped up, although it has closed lower than the open. So nothing I would be interested in there. Canopy growth. We looked at this yesterday. It did have a nice strong close back above the 200 day, which was positive. I decided not to take it. But today now, MACD positive. Today we did test the 200-day moving average intraday. So it's a possibility that I might buy this now, being that the previous day it moved up, today it moved down, and I would get obviously a lot better price than I would have bought yesterday at the close. And it also gives me a smaller risk because it's closer to my initial stop, which is the 200-day. So this did come from a lower low. So if I did buy it, it also would be a half position. So let's go ahead. Oh, sorry. I got a little option situation going on here.
Order filled.
Just give me 1 second.
Order partially filled.
All right. So
Order
canopy
filled.
growth is definitely a possibility with the break back above the 200, the move back down. We tested it intraday. So it's a possibility. We'll just wait and see what this looks like at the end of the day. Cisco, boy, it's just been a one-way rocket up, hasn't it? It's too high for me to buy. Nothing that I would be interested in here, but in case any of you had it, that's really great. Delta, nothing really interesting on Delta at the moment. DDM we have. We're going to keep that as long as we're above the 200-day moving average. Dow Jones, boy, I don't know if that's a real tick or not, but so anyway, nothing on the Dow Jones for me at the moment, although oh yeah, so that crossover hasn't happened. Walt Disney. So we did buy Walt Disney here back on the 3rd of June, and we had this great trade all the way up. I did exit it up here a few days ago when we were above the 70 RSI intraday and then closed back below it. So that was a awesome monster trade, and we did get out of it right at the right time, as you can see. Now, the way I view this chart, we're coming back down into the value zone here. So, a dip buy may be in order if we get the right price action, but I would need the bars to settle down a little bit, start narrowing. Let me know that some of the selling, the supply is drying up in the market. So nothing here on Disney for sure right now, but I'm just saying maybe several days in the future or a week in the future when we're back here in the value zone might be a good dip buy area. Etsy had a nice close back above the 100-day moving average. Has moved up nicely since then, but I don't have Etsy. Facebook having a great day. I know Steve still has Facebook, so awesome, Steve. He bought this down here after it bounced off the 200-day moving average, so that's been moving up nicely. It'd be interesting to see his plan on Facebook. I believe it was above a 50 RSI intraday, so my gut is that he's probably going to lock profits in on that. But just my guess, not sure. Oh, Alibaba, yes, did have the MACD crossover as well. Yep, it did. So you got MACD crossover, move back above the 200. We'll see if it gets there, but if this does close above the 200 and closes above the 50-day moving or the 50 RSI along with the MACD, I will go ahead. I'm going to buy half positions because it's coming from a higher low. All right, 5 below we have based upon the V2 on the weekly. Gold, I did buy gold here when we had the 520 EMA crossover. We also took out this fractal, this high point with 2 lower highs to the left, 2 lower highs to the right. We closed above the 50. We had increased volume. We have positive MACD and got out of that. I believe I sold out of all of that right there. So that was another great trade. So nothing here right now on gold. Google, this was a good trade. I did not take this trade, but we went under 30, over 30, back in up into the third ATR channel. I didn't take this trade because I already had quite a few technology positions, but I know Steve took this one, so that one looks like it's doing really well today. Goldman Sachs, nothing on Goldman. IBB, I did sell this yesterday. I did buy this when we had the V2 right here. I bought it here, but yesterday it moved up intraday, tested the 50 RSI, and then closed back below. So I did go ahead and just take a very small loss on that. Looks like it was a good idea so far as it's down today. Intel we have. It's been a nice trade up. The Russell got rejected at the 200-day pretty substantially there today, so nothing on the Russell. Coca-Cola has moved down a little bit since we had that big kangaroo tail or pin bar reversal up here, so nothing for me on Coke. Lockheed Martin, I did buy a Lockheed Martin back here on the 29th of May when we had this nice V1. Here's day 1, day 2, day 2 washes out day 1, closes back above. Rode that all the way up to here. I didn't like that it rejected the third ATR channel, so I decided it was good enough, and luckily I did. But similar to, what was that, Disney, now we're moving back into the value zone. If we could have this settle down a little bit, have the bar start to narrow, move sidewards, and then have a V1, V2, that might be a good dip buying opportunity. But these two big bars are concerning to me. MasterCard, that is our short. I am going to continue to hold this short position. Merck, having a bit of a pin bar reversal here, a little high on the RSI, so nothing I would be interested in there. Microsoft did open higher, closing lower, so nothing there. Netflix, nothing on Netflix. Nike had that nice strong move above the 200, has moved up nicely from there, but I have not been involved in Nike here. Here's our Philip Morris trade, still up on the day, 1.42%. PayPal did have a bit of a big reversal here, gapped up higher. Looks like it's closing lower at this point, so nothing on PayPal. QLD, same formation. QQQ, same formation. Silver, to get long against silver here, I would have to have a 520 EMA cross under. See, the 5 is above the 20. I need that to cross under and then back over. That would be a good back-tested approach, the 520 EMA on silver, or possibly close back above the 200. So nothing on silver today. SPY, again, bought here at the close, sold at the open. Now it is lower. So I will be buying this again today at the close. Square, this is a good example of a double bottom with a bullish divergence. Here you have a low, you have a rally, you have a lower low. I did buy this on the 4th of June because You see the depth of the MACD bars here at this low. They're very deep. Then we rally. Then we come down here. We make a lower low with a very shallow depth of the MACD bar. That's setting up as a double bottom with the bullish divergence. But just because it sets up there does not mean you enter. That's just big picture. It's setting it's setting the stage. But then you need something to trigger you in. And the trigger for me was we had a V2 formation. Here's day one. Day two washes out day one. Day three closes above day one's close. In addition, it also tested this new range to the downside, rejected it, closed back up into the old range, and we bought it here back on the 4th, and we rode it all the way up to here. I actually ran out of shares to sell yesterday here, but I'm very happy from the entry to the high in the trade was over 14% move. So that was a monster trade. So is down a little bit today. Did find 2 days resistance at the 100-day moving average. So I am flat square here. I would wait for a dip. Now that we've moved up nicely, now it's totally normal, totally natural for the market to have a little bit of a dip, take a little bit of a profit. People are taking profits. That might move it down a little bit. But I would be looking to buy this dip again if it comes back down. AT&T had a big, strong reversal day yesterday. I talk about halfway of large bars. You can see this got very close to we attempted to rally today, but it got stuck. It ran out of gas in the halfway of this big down bar. So nothing on AT&T. Bonds starting to find a little support here in this range, moving sidewards. In order for me to get interested in bonds, I'd have to have more of a dip down here into the value zone, which is in between the +1 ATR channel and the -1 ATR channel. Somewhere in this range might be an interesting place to buy that. Tesla up again today. I almost bought Tesla here, but I didn't. But the reason, again, just as an example, the day before we were under 30, we were under the 30 ATR channel. The next day we closed above 30 RSI and we closed back above the 3rd ATR channel. So the market is giving us a little heads up that these prices down here, nobody really wants to sell down here anymore. So if you've had recent confirmation that no one wants to sell there, that's, then being long is probably the better alternative, right? So I didn't buy it because it stopped right at the 10-day moving average, but that's how it goes sometimes, and it's moved up nicely from there. So if any of you have Tesla, I'm really glad to see that price action moving up. So here is natural gas. We are yesterday, 2 days ago, we were under 30 RSI. Yesterday, we closed back above 30 RSI, but I didn't buy it because that's all it did. It went from under 30 over 30. So that was the only possible reason to buy. I don't really like to use just one. I like to see multiple indicators line up. Today, however, now we've moved up to 36 RSI and we've moved back into the channel. I like when it goes under 30, back over 30, and they both happen at the same time. I don't like when one triggers, then another triggers. So my thinking here is I'm not going to buy this, but I'm going to keep a watch of it. I would like to see this move back. If it moves back a little, it should hold about halfway of this range. So I'm not dying to get in this trade, but if it comes back to me, if it comes back to a place where it makes sense for me to buy, I will. So if it can come down tomorrow and I can get a better price than here, I will. And if it doesn't, if it keeps going, that's okay. But this is what I'd like to see. So I'm not going to buy it today. Oil. It is at a 30 RSI. It is holding the 32 RSI. It is holding the 1 ATR channel. I'm just going to wait. I'm just going to wait on oil. I don't really like that right now. The dollar continuing has moved down strongly. It's even today. Nothing there. Visa. Nothing there. VIX is even on the day. So we do have VIX. I'm going to continue to hold this above this line. 2786 is right where it closed yesterday. And Verizon. I was waiting. I like that we moved up above the 200 day, but I want to see this close under the 200 day and then close back above the 200 day. That would give me a good higher low with the break back above a large moving average. So just going to have to be patient. Nothing yet on Verizon. XLE had a nice move off the bottom. Here's another example. Under 30, over 30. Under the 30 ATR channel, over the 30 ATR channel. And you can see it has moved up nicely from that. I believe Steve has this particular trade as well, so that's moving up nicely for him. Financials, even on the day, did have that strong break above the 200, and the 50 has moved up from there. So nothing for me here. I don't like this formation here. It's not saying it's the end of the world, but there's really nothing I like at this point. If I was in it, it's different, but I'm not in it. So real estate, nothing really there. And health care, nothing there. So what I have marked for today, let me go here on my All right, so what I have possibility marked here today is Alibaba. If it can close above the 50 and close above the 200-day moving average, I will be taking a half position in Alibaba at the close if that happens, but only if it happens. Canopy growth, I do like this. I do like this. I like the strong move up. I like the MACD crossover. I like that we went down intraday and tested it, and now we're back above. I will also take a half position as long as that holds. Oh, goodness me. Look at that, everybody. That's United Technology. So those are my only two possibilities for today. Oh, and of course the SPY, the end of day trade on the SPY. So everything okay with current positions? Apple, yes. DDM, yes. 5 is fine. Intel is fine. I would only sell it if it closed under the 50-day moving average. Philip Morris is doing fine. The Qs, fine. VIX, gonna have to watch that one. MasterCard, I'm going to continue to hold this MA short. You can see it did go down much more earlier in the day, but we were able to lock in some profits down there as well. Yeah, I figured you did have ERX still, and in case you don't know, people don't know, ERX is triple leveraged energy from XLE. Dr. Jorgensen says, always nice to own some weed. Well, it's very likely that we're going to today. One thing I did want to mention also, we talk about moving average crossover systems, and a good back-tested approach for trading the SPY is the 1050 EMA cross. That's when the 10 exponential moving average crosses back over the 50-day exponential moving average on a closing basis. That is a mechanical back-tested system that you would buy when that happens. You would keep the position until it closes back below the 10 closes back below the 50. If you want to use this completely mechanically, these are the returns. The buy and hold approach was 190.6%. The 1050 EMA cross approach did return 153%. So not quite as much as buy and hold, but you can see the drawdown on the 1050 EMA cross was much less than the buy and hold. So this would be a legitimate back-tested approach. You can see it did cross today. Now, in this particular case, me personally, it totally is legit, as far as back test, but me personally, I'm not going to take this trade today. One, because I already have long equities, and two, I like to look at these in the context not just of the crossover, but also other technicals. I mean, MACD is positive. We're at 58. That's fine. That's good. But I don't like that we're up here in this third ATR channel range. I could be wrong. I could be right. But if I'm wrong, my other stocks are going to be moving up. If I'm right, then if I would, I'm not saying I don't want to buy this in the future, but I would like to see a dip back to one of these moving averages. So just totally mechanically, it's totally fine. It did cross today. It looks like it's going to close above. So if you go to etfreplay.com, you will later today, you will see that this has triggered today. But I'm going to use a discretionary element. I'm not going to buy it here just because, one, the huge move up we've already had, and we're also in that third ATR channel. If we can get back down into here, that is where I would like to take my position. And then I will key off of the crossover happening, but I just feel like, just in my opinion, I could be totally wrong, I feel like I can get a little better price than buying it today. But we shall see. Don't know that for sure. But I did want to point that out, that did cross today. Oh, Mount Doji jumped into CGC yesterday. Well, that's okay. I mean, it's fine. It could have just gone up today as well, but at least it is still above the 200, so at least you're still in there, right? So, but I do like this secondary test of the 200, so that's positive. All right, so with that being said, Alibaba, I'm going to wait and see about Alibaba, 163.13. So it is close to closing above, but again, I need this to close above the 200. I need this to close above the 50 RSI. Canopy Growth, I'm going to go ahead and buy that right now. This is a half position.
Order partially filled.
Now I have an F-35 going over my house. All right, let me go ahead and get C. Okay.
Order partially filled.
42.93. All right, so that's my entry on Canopy Growth. Anything we have to do? Oh, I guess we better go ahead and get my SPY as well.
Order partially filled.
All right.
Order filled. Order partially filled.
All right.
Order filled.
288.92. All right. So that's the new entry on there. Now that leaves us with Alibaba. Is it going to close? I don't know. It's going to be close. I'm going to get it queued up. 163.13. What do we have? We have 1 minute. No, it doesn't look like it's going to get there. Looks like VIX is okay. It doesn't look like Alibaba's going to get there, either on the RSI or over the 200. So we may have to wait for tomorrow.
Order
Ooh,
cancelled.
that's the market.
Order cancelled.
I always like when the market bell goes off, because it's like all of a sudden all the stress goes away. I'll tell you, it's tough. It's kind of tough at the end of the day, trading several accounts and having to do all these last minute things. So when that bell goes off, it's kind of a relief. But we did
Order
have
cancelled.
had a beautiful day today. We had a great day. The MasterCard short really paid off for us, and Philip Morris is up nice. So yes, another good day. Appreciative for that for sure. All right, now let's see if anyone has any questions. Before I do get to questions, I do want to put a little plug in and let you know that I do offer private one-on-one teaching and mentoring and training sessions in the evening time via Skype. So, if you feel like you could benefit from some one-on-one time with me, please let me know. My email is in the description of this video, and also my hourly rates, but just so you know what that might look like. Generally, I have, it's a free call. We just do kind of a introduction call just to get to know each other a little bit better, for me to ask you, what's going on with your trading, what's happening with your experience, what are the issues you're having, and then I take all that
Order
information
cancelled.
and I put together a program that will fit you, fit your personality, your financial situation, your availability during the day, all that kind of stuff. So I've had good success with my clients. I like to teach. I put a lot of effort into it. So I do think it would be of value. So if that's of interest, let me know. Like I said, my email's in the description and my hourly rates are in the description there as well. Or you can send me an email, or you can send me a message on Twitter. And then also, if you like today's live stream, if it was helpful, if you're getting some value from this channel, all I ask is that you would give me a little thumbs up there on YouTube. It helps the channel and helps me grow the channel so that I can teach even more people. So if you could hit the thumbs up button, I would really, really appreciate it. So, all right, let's take a look and see if anyone has any other questions. Frederick, you never buy speculative stocks like Beyond Meat. Well, I'll tell you, with my trading partner, which is Dr. Jorgensen, right here, we have been discussing Beyond Meat. But if you see the chart, do you see how it's a new stock? And so it does not have enough data to really get any indicators. That, Frederick, is really why I have not been doing anything with Beyond Meat, is because the technicals are not there for me because there is not enough data. This is one of the most heavily shorted stocks. It has gone up like crazy. So we were actually talking about shorting it there yesterday, like one share, just kind of for funsies, right? But the valuation of this company is super, super high right now. It has a huge short position, but that doesn't mean it can't go up. Shorts have been getting their butts handed to them in this stock. So, but the alternative meat industry is definitely a growing one. But generally, I try not to get involved with really crazy, volatile stocks that are in the media every day. So as a general rule, I don't, Frederick. Mount Doji says, interested to hear your thoughts on XLF again when you get the chance. I had to step away when you first went over it. All right. And how dare you, Mount Doji, for stepping away? Just kidding. So It is moving up nice. I can't remember, Mount Doji, where you bought it. Did you buy it here when it closed back above the 200 and also the 50? I kind of feel like you did. So it has been moving up nicely, which is good. Did make another higher high today. But as soon as it starts making lower highs and lower lows, that would concern me. I'd also keep a real eye out here at the third ATR channel and see if you get some rejection here, because 92% of prices stay between the plus ATR, third ATR channel and the negative third ATR channel. So basically from here to here. So when you get down into this range, you may have some upside potential. You get up into here, your upside potential starts diminishing. In my experience, doesn't mean it always happens, but you do it 10 times, probably 7, 8 times out of 10, it will find resistance at that level. So, a close below the previous day's close, or a rejection of the third ATR channel, or a close below one of the 5-day moving average would be my stop, Mount Doji, if I were long XLF. David Gordon Russell, hey, says, what do you think of plan and Anaplan? Is plan a oh yes, it is. Okay. Well, on earnings here, you broke above this fractal again as a fractal where you have a high with 2 lower highs to the left, 2 lower highs to the right. It was also in the 1 ATR channel, which is a nice place to be because you have some room to move up or down. So where did this close? This closed way up there. Kind of a scary one to buy up there. But at this point, I certainly, if you were in it, great. It's been a nice move. But yesterday's bar, I'm not too enthusiastic above yesterday's bar, because this is a kangaroo tail where you open lower, you go quite a bit ways higher and then close back lower again. That just means that this area got sold into. There was a lot of supply that came into this area. So, this is a topping formation. This is a topping pattern type of formation. So we are in an uptrend, obviously, and when you're in an uptrend, when you're above the third ATR channel, it gets a little pricey up there. But the way I look at these is it's not something right this minute for me, but because we have a nice uptrend, now I just wait for a normal and expected pullback, right? The old saying, buy dips in an uptrend, sell rallies in a downtrend. Well, this is an uptrend. Now I will be looking for a dip back down, maybe to the 20-day moving average, somewhere in this area. That would offer a good risk to reward ratio. But just because it comes down here doesn't mean you automatically buy it. It comes down here, then you wait for some kind of trigger like a V1. So the big picture, it's in a good area, but it doesn't mean buy. But if it does get back and down into this area, then wait for a V1, V2 trigger, rejection of a moving average, something like that to get you back in. But remember, when there are big moves that you miss, don't sweat it. They're going to come back. And then, when they come back into the value zone, when they've had a dip, that's when you look to re-enter them. Hope that makes sense, David. Mount Doji says, trust me, I was upset about having to walk away. The ATR indicator is pretty new to me. I'm going to read up on that one. Well, the ATR indicator I use all the time, Mount Doji, and these lines here are essentially ATR indicators, and they help me decide on how many shares I'm going to sell, because they're really, ATR means average true range. So the higher the average true range, the fewer amount of shares that I buy and that I phase out of, and so forth and so on. And they also tell me, whenever I see a bar that's larger than 1 ATR range, see from here to here's an ATR, from here to here's an ATR. See this bar here? Much larger than 1 ATR. So 1 ATR is to be expected. Something that's larger than 1 ATR should probably get your attention, like MasterCard. 1 ATR is from here to here, from here to here. See, today's ATR was much larger than one ATR, the range of today's move. So I don't like to buy in front of big ATR bars because that means more than normal amount of volume and price move was in a bar that is larger than one ATR. So as a general rule, I don't like to buy something to the long side if the previous day was a big down bar larger than one ATR. Yeah, look into them. Sometimes they're called Keltner channels, also Mount Doji. Keltner channels or ATR. So if you have any other questions when you're getting into that, let me know. Frederick says, okay, I understand. Do you trade biotech? Is a dangerous sector? Well, yeah, I do trade biotech. I prefer to trade the ETFs really more than just an individual stock. I remember I did buy biotech here a couple days ago on this higher low V2, but I did sell it yesterday because it got above the 50 RSI and then closed above. So it was good at least that I got out. But yes, I do trade biotech if IBB, especially if I get a good signal. And over here, a good back-tested signal for biotech is the 530 EMA cross. So when this 5 closes above the 30-day moving average, this is a gray line. I know most of you are used to being the 50, but in this particular chart, it's the 30. So a 530 EMA cross might be a good mechanical entry position on biotech as well. But yes, I do trade it. But just like anything else, it has to have a good setup. David says, thank you. I bought the breakout and sold 60%. Oh, is that right? That's fantastic. You bought here then. You bought here about 44 bucks, David? That's fantastic. And you've been phasing out on the way up? Man, I like to hear that. I like to hear that. Let me see. Yesterday, where did we get to? 70. Yeah. So today we lost the 70 RSI. Good for you, my friend. So, at this point, obviously I don't want to give you any suggestions, but just keep in mind in general trading plan, when you start, when you have a nice profit, and then something goes against you, consider maybe locking in or whatever. You don't want to let it go all the way back down. So, tighten up your stops and make some good decisions. But I'm glad to hear that you were phasing out, that you phased out 60%. You know me, I'm a phaser. Mount Doji says, I'll be interested in what Verizon does tomorrow. Me too. Me too. At this point here, if we got above this previous high here, now it's a fractal. Here you have a high point, you have 2 lower highs to the left, 2 lower highs to the right. A break back above here might be interesting. I honestly would like to see it close below the 200 and back above the 200. Then we have a higher low break back over the 200 here. See, this one made a lower low, and doesn't mean that you can't take it, but this kind of formation happens a lot. I want to see it close under the 200, back over the 200, giving me the higher low, because the people that bought here sold here. That caused that to go down. If it's now, those sellers are out of the equations, and now if it's strong enough to move up in the future here, then there's one whole group of sellers that are gone, which has a possibility of making this move up easier. You listen to my advice. I'm glad to hear that. I hope it's helping, David. Mount Doji says, Twitter barely stayed above 50 RSI and 21 EMA. Let's check it out. I got it right here. Yeah. Yep, it did. There's a couple ways to look at this. Today, we made a lower high and a lower low. That's not particularly great, right? But on the plus side, we did hold above the 50 RSI and we did hold above the 50-day moving average. So kind of a mixed message here. but it is holding the support. I would give more credibility to the moving averages underneath this as support. What I would really like to see happen on Twitter is I'd like to see, unless you own it, Mount Doji, if you own it, I do not want to see this. But if you don't own it, well, I'd like to see it close under the 50-day and then back over the 50-day. Again, giving us a higher low. People that bought here, sold here. That drove it down. If it's strong enough to move back up again, these sellers are now out of the equation. I don't have to worry about them. So close below the 50, close back above the 50 is what I would be looking for on Twitter. Let's see, where did the market actually close? So the market closed down 14, not too bad. NASDAQ was down 0.6, so about 0.01%. So about break even on a day. It seemed a little bit more like a down day because we had such a big open, but you know, that's how it goes. So we have Apple, we have DDM. We still have 5. We still have Intel. Philip Morris had a nice day up. We still have Qs. We re-entered the SPY here today at 28.92 after selling there in the morning. And VIX did stay above the death line of 27.86. So I am still long VIX. And MasterCard did move down. Oh, and our new addition, of course, is Canopy Growth, and looks like it's right about where we bought it. Nope, we're up 2 cents. So on Canopy, as long as it stays above the 200-day, I will keep it. If it closed even 1 penny below tomorrow, I would get out for a small loss, hopefully. Now Doji says, I don't own Twitter yet. I want to see it to lower a bit more as well. Okay, you don't own it, so let's hope it goes down then and closes under the 50 and then closes back above the 50. David says, thank you, Greg. I'm off for a cup of tea. Okay, sounds good. Hope you enjoy your tea, David, and hope to see you again. So, all right, does anyone else have any other questions that I can answer? David, thank you for coming today. Mount Doji, thank you. Frederick, thank you. Steve Burns, thank you as always, my friend. Dr. Jorgensen, thank you. Johnny Norsworthy with here, thank you, Johnny. Oh, I missed this one. I'm still looking for an analyst to follow that actually gets something right. Target prices I see look more like they were just made up. Yes, I 100% agree with you, Johnny. I take what analysts say with a grain of salt. To me, the best analysts are the moving averages because that's real. You know, that's not spin. That's really what the market thinks. So those are my gurus, and those are my analysts, are the moving averages and the technicals. All right. Andy says, how do you determine a trend trade versus a discretionary? It's a good question. I like to have a mix of trading approaches. I don't want all my trades just to be discretionary. I don't want all my trades just to be mechanical. So, you know, I like to have a variety, but how do I base them? I essentially base my quote trend trades upon valid back-tested approaches, like you know, the ones I'm going to show you here are all back-tested positively. The 5 crossing over the 20-day, the 5 EMA crossing over the 20, that is a back-tested approach that makes money. Let me show you real quick. I'll just give you an example. That one is based upon the Qs. That one is the 5 EMA crossing over the 20 EMA, which did cross yesterday, by the way, everybody. But I didn't take it. Doesn't mean I was right or wrong. I just didn't take it because I already had some. But you can see the 5-day crossing over the 20-day since 2000 has returned 135.6% compared to only 125 for buy and hold. But the big takeaway here is it only had a 38.9% drawdown compared to an 83% drawdown. So I point that out because the 520 is something I could consider for a trend trade. The 1050 EMA cross on the QLD is also a legitimate trade. The 1050 crossing over the DDM, which is the double leveraged out, is a quantified back-tested approach. The 1050. Let's see. The 1050 on the SPY is also a legitimate. Any of these you could have taken as a back-tested trade for a trend trade. I didn't take this one today. Doesn't mean that I'm right or wrong. It just means that I didn't take it because I kind of threw some discretionary observation in there. The buying the 200 under the 200 day back over the 200 day on the SPY, buying the 200 day or the QQQs, the NASDAQ 100 under the 200 day not being in it, over the 200 day being in it. Those are all back tested approaches. The 520 EMA on gold, the 520 EMA on silver. So any individual stock that I buy, generally, I guess as a general rule, almost all the stocks that I buy are going to be discretionary. And then the indexes, like the Qs or the SPY or the Dow or the DDM or the QLD or the Russell, I can back test these. So as a general rule, my trend trades are going to be the indexes based upon one of these moving average crossover systems that's back tested, that's profitable over time. Those tend to be my trend trades, and the individual stocks tend to be my discretionary trades. So, I mean, let's look at what we have right now, right? Just to actually put it really into perspective. I bought the DDM over the 200. I'm going to keep it over the 200 because I know, based upon the back test on etfreeplay.com, that they're good back tested approaches. So getting in this trade, I decided, okay, I'm going to go ahead. This is going to be a trend trade for me. QQQs, same thing. I bought it here. Why did I buy it? I bought it with the close under and back over the 250 because I know that back test well. So getting into this, I said, okay, this is going to be a trend trade. I'm not going to worry about all the moves in between like I would if it was a discretionary trade. So I hope that helps, Andy. Okay. Well, listen, I appreciate everyone coming by today, and if you have any questions in the future, you're very welcome to email them to me or send me a message on Twitter. If you can't think of anything right now but think of something later, just let me know. So I appreciate everybody coming by today. Go out, do something nice for somebody today, even just a wave or a smile or hello or hold the door open, or just something, right? Could make a positive difference in somebody's day, and it's good for you to do as well. So I guess I will leave you off with that, and hope everybody has a good rest of their day, and I hope you're able to come by tomorrow at the regular time during the last hour of the market. Hey, you're welcome out, Doji. All right, everybody, take care, and on the way out here, I got to play the government disclaimer. So thanks again, and hopefully see you tomorrow. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.